Thank you. We have our first congressional speaker today with us today, Congressman Warren Davidson. Congressman Davidson represents Ohio's 8th Congressional District. He is a member of the House Financial Services Committee and serves as the ranking member on the FinTech Task Force. After high school, Congressman Davidson enlisted in the Army as an infantryman. As part of the 3rd Infantry Division, he was stationed in Germany and witnessed the fall of the Berlin Wall. Congressman Warren Davidson went on to attend the United States Military Academy at West Point. And then after the Army, he worked for his father and earned an MBA from the University of Notre Dame. He has spent 15 years owning and operating manufacturing companies in Ohio, and in 2016, he again responded to the call of service and came to work in the U.S. House of Representatives. Interviewing Congressman Davidson today is Josh Beck from KeyBanc Capital Markets. Josh is a managing director, equity research analyst with KeyBanc Capital, and he focuses on the broadly defined fintech and software ecosystem. Josh is voted #1 stock picker in IT services by Thomson Reuters in 2018, and he holds an MBA from Carnegie Mellon University's Tepper School of Business and a BS in engineering from Virginia Tech. Josh, I'm going to hand it over to you now, and thank you both for taking time out to be with our members today.
Thanks, Jim. Appreciate the chance to talk with you all.
Yeah, thank you so much, Jim, and thank you, Congressman, for the time today. So we'll just run through a couple of questions here. I wanted to start with one of the areas that Jim mentioned, which was your role in the FinTech task force. Certainly that's the area that I spend a lot of time here at KeyBanc Capital Markets on the equity research side of things. So I really just wanted to kind of understand with your role as a ranking member on that task force, which I believe operates under the House Committee of Financial Services. Just help us understand a little bit about the framework and the purpose of the task force, and kind of what you hope to accomplish with it.
Yeah, thanks for the question. And currently, obviously, Democrats are in the majority. Maxine Waters is the chairwoman of the committee. Patrick McHenry is the Republican ranking member. And frankly, the majority party kind of chooses the committee structure. So they're formally subcommittees. And then, when you looked at areas of jurisdiction that were kind of with a void, broadly, FinTech was not there. So she created a task force. And on the Democratic side of the aisle, that gives the chairwoman a little more flexibility to choose who leads it. And so Steve Lynch is the Democratic member of Congress who's chairman from Massachusetts. And frankly, they largely pick the agenda. Steve Lynch has been great to work with. We've had some input. We've had some really good hearings. This area isn't normally partisan. It's things like privacy are pretty good civil liberties alignment between Republicans and Democrats. And frankly, in Congress, a lot of people have really wrestled with understanding the space. So a lot of the folks that do understand the space well have been put on FinTech or AI as task force topics. And we've been able to hold early hearings that have kind of primed the pump for things that turned into good full committee hearings and maybe will turn into better full committee hearings. Things like central bank digital currencies, things like, what's going on with payment for order flow, for example, things like that in the market.
Fantastic. Well, that's really helpful. One of the things that I wanted to discuss a little bit was some of the regulatory frameworks that we've seen for some of the just traditional fintech companies. I would say this was a little bit maybe even ahead of crypto, but we have certainly seen some lighter versions of bank charters be approved for some of these fintech companies. So just curious to hear your view on, if that approach seems to be working, and if you're kind of happy with some of the outcomes that it's produced so far.
Yeah, I mean, I'm pretty unhappy with the regulatory framework. I got on the Financial Services Committee in 2017. And the ICO or initial coin offering market was going kind of nuts. And I was like, well, shouldn't we do something about this? And there's been a long-standing practice of the Securities and Exchange Commission primarily, but some others, regulation by enforcement. There isn't real legal clarity. I've kind of joked that the Howey test seems like a Jackson Pollock painting. You stand there and people think they know what it means, but then you talk to somebody else and it's something else. And anyone at the SEC seems to think everything that they view looks like a security, particularly lately. But, you see companies that have been targeted. And meanwhile, there's, as a member of Congress, even 2017 up till recently, there's been things that have, to me, looked an awful lot like pump and dump scams that the SEC's paid no attention to, and they've kind of selectively enforced. And I think that frustrates everyone in the market, particularly people that feel like, hey, I took guidance, particularly Hinman's guidance, for example, on Ethereum, as laying a groundwork, and then the SEC comes back later and says, no, that was just a speech. I think it's really frustrated the market. It's scared a lot of capital out of the U.S. And we look at crypto, I think 75 to 90% of the liquidity is offshore. That's not really good for America. The companies doing this innovation are American companies. And frankly, they're launching offshore to find more regulatory clarity than our markets are providing. There are a gazillion use cases. I mean, it's like the early days of the internet. And so there are still lots of great things going on in America with American innovators and frankly, capital from other places coming into our country because we have such a hub. But we don't have the legal clarity, and the agencies really aren't adequately providing it. So I really have been excited that the chairwoman created the FinTech task force. I'm working with our Republican, hopefully majority, and by 2023, to make sure that this topic is included in a committee of jurisdiction. I'd love to be one of the subcommittee chairs and continue the work that I've been pushing for here, which is really at the most basic level where everyone starts to completely agrees is there should be, a bright line test that will define for anyone, investors, innovators, and the SEC, what is and what is not a security, for example. And there are a few other things along the way that we need to get to. But if we can't get to that and we can't get to clarity for stable coins, I think it's going to be really hard to tackle the more complicated things like exchanges and like use cases that you're probably interested in investing in at KeyBanc or giving recommendations to, but you don't have the certainty that you can really put kind of bank capital behind.
Yeah, that's those are all really good points. And I wanted to go back to one of the points that you made, which is, I think you said 75 to 90% of the liquidity is offshore. Do you feel like, the U.S. is behind maybe what you see in other countries with respect to regulation? And do you think that's a gap that we can, close over time if it does exist?
Yeah, I mean, I think we can close it because we have such a head start in capital formation already. I mean, I think over 50% of the world's capital markets are in America. You look at, the IT infrastructure we have in our country, we have a huge competitive advantage with that, but we're losing ground to places that are providing clarity. And we're frankly at risk of losing kind of some of the standard setting benefits that we've had with the early mover advantages we've had in, so many industries. America led with, agriculture early on, the Industrial Revolution, automobiles, aviation, aerospace, computers, the internet. Like, why are we taking a pass on FinTech? It makes no sense to me.
Agreed. It certainly seems to be rising to that type of level where it really is a revolution. So it is incredibly important. I also wanted to go back to one of your earlier points about, I think generally people view the state of American politics is quite partisan. So I think it was quite interesting to hear you say that this is not really as much of a partisan issue. So how true is that? Do you really see supports from both sides of the aisle? Are there certain aspects of of the future where the left and right is tilting towards on this issue, or how aligned are the different parties here?
Yeah, I always tell people like the Patriot Act is really a decent proxy for how people view crypto and FinTech generally. Really goes to how much control should the central government have, and a lot of DeFi or kind of the Web 3.0 pushing things off, the current model comes around, well, we want to make sure that the government has access to this, or we want everyone to have some sort of third party relationship, which is basically so the government can spy on you. And if you really love the Patriot Act, then, you probably like this. There are people in both parties. I mean, it passed like the Senate 98-1, I think, maybe somewhere in there, 96-3, something like that. The House, there were like 60 some no votes. Since then, views have evolved on the Patriot Act. And in general, people have said publicly they favor democratic access to capital, but one of the barriers is also the accredited investor rule. So this is more of an issue for Democrats. They kind of take a paternalistic view to capital formation, that some of these things are risky and uncertain. And so, lower income people are more vulnerable because they're generally less well informed. And if they lose money, they're less able to recover. So they've pushed this idea of accredited investor rules, and they'll point to things like, well, Bernie Madoff did this and these people were hurt. Like, yeah, Bernie Madoff's in prison. I think the cure is to prosecute fraud, not to prevent people from making investments. Their paternalism has prevented people from earning, like 3,000, 4,000, 5,000% returns. And when I held this roundtable in 2018, I had a guy who was writing code for a startup, and he asked, why do Republicans protect the rich investors? And I said, what are you talking about? He said, I'm literally writing the code and I can't put my capital into the company because I'm not an accredited investor. And I was like, oh, well, let me explain the accredited investor rule to you. So some of these things for people that, aren't in depth in politics, aren't intuitive in terms of where the parties are.
Very helpful. I also wanted to go back to some of your comments about some of the hearings, that you've had so far. You certainly said they've been productive, and one of the areas seemed to be around the central bank digital currency idea. Obviously, that's a topic where, right, the Federal Reserve and the Treasury are spending a lot of time. So maybe just help us understand, what were maybe some of the learnings that have come out of the hearings, and where do you see that topic headed in the coming year and years?
Yeah, I will say the left is a little divided on this. The right's pretty united in saying, look, we don't necessarily need the Federal Reserve to operate any of this in the United States. Our money is heavily digitized in a sense already. It flows through third parties, the current banking infrastructure. And if we would let it, like Brian Brooks was trying to when he was at the OCC, the Office of Controller of Currency, then it would flow more readily through the current financial system. If we provided regulatory clarity for stable coins, for example, a lot of the use cases could be solved with a much more stable store of value with a stable coin and digitize money in that way. And it would also have the added benefit of creating increased demand for US Treasuries, which is a problem since spending is a bit out of control, right? I mean, it's fueling some real inflation. That's hitting people at all economic levels, but frankly, at the lowest economic levels, the worst. So, that Republicans are pretty united in that view. And Democrats are kind of conflicted. And you saw that kind of with the appointment of Omarova to be the OCC. Talk about a polar opposite from Brian Brooks. This is a woman who, has a PhD in banking from the University of Moscow, who was basically celebrating the Soviet style banking system, which in the modern version is essentially what the Chinese Communist Party is working on, a centrally controlled central bank digital currency, complete with capital controls tied to social credit. So if you're a good citizen, you have access to capital. If you're not, you don't. The central bank digital currency can be completely filtered. And I think there's a lot of antennae up because, the Bank of International Settlement, Carstens, who's spoken a lot about a central bank digital currency framework. And for people that don't know, the Bank of International Settlements in Switzerland, and it serves kind of as a central bank for the central bankers. So like the Fed and the European Central Bank would have accounts with the Bank of International Settlement. So they've talked about standard setting that is highly compatible with China's version, which I consider like the creepiest surveillance tool known to man. And so strongly opposed to that version of a central bank digital currency. There are some Democrats who won't necessarily say, but if you look at the hearings and some of the witnesses, they won't necessarily say they love that model or they wish they had all the power the Chinese Communist Party did, but that's essentially what some of the witnesses have argued for. And it's pretty compatible with a postal banking model, which has been popular with some parts of the left ideologically for a while. And I think that's one of the challenges. And then I think the last thing is both parties have a tendency to do nothing in Congress when their party controls the White House, and they just defer to raw executive power. And unfortunately, that doesn't bode well for, nothing against the current folks there. We may do something. I hope we do. But the tendency is well, just to defer to the executive branch. And so that's where I'm more optimistic that in early 2023, if Republicans do take the House up with a divided government, then the House would actually have, a better path to oversight and regulatory frameworks that may stretch the administration, but may not stretch them so far that the president would veto them.
Fantastic. That is a lot of helpful context. So I appreciate you sharing that. Obviously, a very fluid topic with lots of moving parts, as you described. One of the other areas you mentioned was PFOF. Certainly, that really hit the news cycle quite hard in recent years. So yeah, I would be curious to hear kind of what came out of the hearings and how you're thinking just broadly about that topic.
Yeah, I think this all kind of came rapidly, and it was interesting to see the momentum behind it because of the GameStop hearing. The short squeeze that happened with GameStop and kind of the Reddit thread and Robinhood. Robinhood literally had to stop trading because of some issues. And early on, there was like an Ocasio-Cortez tweet and a Ted Cruz tweet, and they seemed to agree. And then as we started approaching the hearing, it became kind of back into some sort of traditional camps. And it was these poor retail investors are being exploited by the Wall Street people, became the Democrats' narrative, and the Republicans' narrative came like everything's fully disclosed. If you want to go to a fee-based system, just don't use Robinhood or others that use payment for order flow, and you could pay a fee. And, kind of Democrats argued, well, most people aren't sophisticated and they won't do it. So we should, well, then there wouldn't even be the no charge accounts, period, because there's no way to operate them. The way they get paid is payment for order flow. So I think sometimes we talk past one another in those hearings. I consider it a win that we haven't implemented any really bad ideas yet, only talked about them. So, one of the good ideas that I thought made sense was moving towards, same day settlement so that you could deal with custody. FinTech can already do this. There's a gentleman from Delaware who had talked about this in terms of voting proxies for shares. And there are folks working on it in FinTech to be able to do it at scale. And you could have real-time settlement, or you could have something less. I see the value in netting personally. So if you net your trades at the end of the day, same day, by the time the market's open, or say by midnight, you could easily net on a current market structure where it's not a 24/7, 365 market like crypto is. But whereas like regular exchanges are still functioning, you could have a close, you could net, you could move your cash for the day, and then you could have an orderly open the next day. But you would have custody happen within that same time frame when you net. And we're doing it on cash. Why aren't we doing it with the actual chain of custody? So there are a lot of FinTech solutions that can provide it. And there's some consensus there, but it kind of gets wonky enough that people check out.
Well, you've addressed my question on settlement that I wanted to ask. So thank you for doing that. And yeah, maybe a little bit of a follow-up just on this higher level topic of exchanges. Obviously, we have heavily regulated, very well-defined regulations for the equities and bond exchanges, and now we have this entirely new asset class and some real scaled companies when you think about some of the the Coinbases of the world and such. Maybe to help us understand kind of what regulatory purview are they falling under, and maybe what's the right approach for these crypto types of exchanges?
Yeah, that's a great question. And, one of the ways to illustrate, well, we're having a hearing on, traditional exchanges today in the capital markets. So we'll see how that goes and see where colleagues stand on some of the current issues that do have clarity. So for example, in more regulated markets, everything is disclosed, all the fees. If you want to change anything, you have to file public disclosures, go through the SEC before it can be implemented. And so there's an incredible amount of transparency. People complain that there's not a lot of transparency in crypto, and that could be true for some of the exchanges. But one of the biggest books of business for normal exchanges is selling data. So they sell subscriptions to data, and so people can get, say with a substantial fee per month, a Bloomberg terminal that gives you massive loads of data. And retail investors can't afford to access some of that data. And there are services that have provided some level of that data and worked out agreements to be able to provide it. But if you look at like FTX.com as an example, they trade about 16 billion a day, and they have like less than 100 employees. So how are they doing that? Well, they do most of their business offshore because we don't have clarity in the US. And if you want to use FTX as a US citizen, you have a scaled down product offering. And frankly, the wealthiest known crypto billionaire is the founder of FTX. So, the offerings are in demand, but we don't have the full service in the US because you can't really function the same way for US citizens as you can for most of the rest of the world. So how are they serving US customers? Well, they have state regulated money service businesses, and they're working on commodity licenses, out of Chicago heavily, because they view most of the things they're trading as commodities. And, this is an ongoing dialogue because I think Gary Gensler came into office after leaving the CFTC, where lots of things looked like commodities. He went to the SEC, where lots of things look like securities. And I just think this is all begging for Congress. Would you guys please do something that provides a bright line level of clarity for all of the investors in the market, all of the innovators trying to come up with an offering, and frankly, the regulators, so that's like, what's going on. And I think capital formation in the US would rapidly accelerate. And, the same thing happened in the US with the internet boom. Telecommunications Act of 96 passed, and by 99, we had just amazing things happen. There were bubbles. There was an asset bubble for sure. If we can avoid a bubble, that'd be great. But, the reality is we need the clarity, and the transparency and disclosure regimes part of it. And, if you talk to the SEC, they say that's what they're working on. And, that's kind of what they're trying to push in negotiations with companies like Coinbase that aren't in enforcement actions per se, though they did don't offer a lending product letter from the SEC. And, they've obviously got Ripple/XRP tied up. They just reached a settlement with BlockFi, which was offering interest accounts, which is something great for retail investors, but it would benefit from some transparency and disclosure. So I think that's the thing, is there isn't a sufficient level of transparency and disclosure. Last thing I will say though, FTX is a distinctive. All of their data product is available for free.
Yeah, that's very interesting. Well, just to close out, I think you've addressed it, but do you really see the regulatory approach being covered by the existing structure of regulatory bodies? Obviously, we have the SEC, we have the Treasury, we have the OCC, we have many. There's been obviously newly formed divisions like the CFPB in the past. Like, do you think we have the appropriate, structure at a high level, at a body level to regulate the future of crypto and some of these even, further reaching elements like Web3, or do you think it maybe needs its own specific, body to really address it?
Yeah, I mean, I think that it needs Congress to do something. I mean, because no single regulator has, frankly, they don't have the statutory authority to take action on a lot of these things. So they're going to try to do it, which is essentially an arbitrage, not entirely different than what the innovative companies are doing. They're like, well, this law is kind of close, so I'm just going to try to arbitrage it, and in the absence of orders, I'm just going to attack down this path and hope it works. And sometimes it doesn't. And I think that's kind of, in a way, what the regulators are doing. There just isn't a sufficient body of law, and Congress needs to do it. Whether you have to create another agency or not, I think you can do it without creating one, but you need to be able to be clear at the most foundational level. If you can't decide what's a security and what is not, then you can't be clear what the SEC can do and can't do. And the SEC needs to know that. It's like, no matter how mad you are about it, this thing over here is not a security, or it's not a security anymore. And because Congress hasn't acted and regulators haven't, there are a lot of things that probably were securities at launch, and somewhere at some point now, with the tokens distributed and traded, probably aren't securities.
Well, great. I think we're up on time. Jim, are you going to close this out here, or?
Yeah. Josh, I want to thank you for you did a great job moderating here, Congressman. I just want to thank you for all the efforts that you've taken in learning about our industry. All right. Obviously, you sit on the committee that has oversight of our industry, and I think the first time that we actually met with you, sir, was around 2017, and it was on the Consolidated Audit Trail CAT.
Okay.
Don't know who you got angry at Congress that was assigned to you back in 2017, but I can tell you that your understanding and your knowledge of our industry has grown dramatically since 2017, and we really do appreciate you taking the effort to understand our industry and how it works. So thank you for our service to our country and also to our industry. So thank you very much.
Yeah, thank you. Appreciate the chance to talk with you, and look forward to seeing you all in person before long. Take care.
Okay. All right. We're going to take a short break. We're going to come back at 10 o'clock for the panel on digital assets. Everyone else, have a great, and then we'll see you in half an hour. Thank you very much.